Alright, what's good YouTube? It's your boy CookieFX here, and today I'm bringing you guys part 2 of understanding market structure. Like I said in the first part, we went over higher highs, higher lows, how to indicate whether if it's on a bearish trend, a bullish trend, and how to identify whether when it's breaking out of its original trend. Now, like I said in the first part, I'm going to show you guys an indicator that I personally used when it came down to backtesting market structure break, like not even backtesting market structure break, but just backtesting Fibonacci in general. So you're gonna want to press the indicator. So you're gonna want to press the indicator. You're gonna want to type in major minor fib points by bench ch. Okay, I already have it set, so I'm gonna actually put a star on it. Now when you go to the charts, let me turn it on. All right, when you go to the charts, you're gonna see all these like points on it. So for those who do not understand higher highs and higher lows and lower lows and lower highs, this indicator will help you to identify market structure, where the structure is being broken. That's why the fib points are there. But you know, I have to give my 2 cents. Do not rely off the fib points. I'm gonna say that again. Do not rely off the fib points, especially when you're in the live market. When I used the fib points, I used it to backtest. I didn't use it in the live market because, of course, no indicator is perfect. But the point I'm trying to make is the indicator. Okay, say you're in the live market, right? And say this point right here. Say this point right here, okay? Most of the time the indicator won't bring the fib point right away, if that makes sense. Like, okay, say if you're like say if you're trading Euro USD live and it's London session, right? It won't bring the fib point up right away. That's why I said at the beginning of this video, I use it to backtest properly. I don't use it in like when I'm trading live, because I could clearly take this off and see where structure is being broken. Okay, so like I don't need this. I really only use it for backtesting, and I used it when I was at my beginning stages. Okay, so basically, like I said in part 1, I'm gonna basically teach you guys how to use the major minor fib points, and then I'm gonna go through live examples on how you could use the fib point to basically understand market structure. So let's get into it. Like I said, you go to the indicator, you type major minor fib point, and you type in the major minor fib point, and from there you put on the indicator, and then these lines come up. Okay, so let's look at this example right here, this one. Okay, if you look at the 200 EMA, if you have, let me say this too, if you haven't watched that video, go back and watch that video as well, because it's an indicator that it's an indicator moving average that helps you identify the overall trend of the market, especially on the 15-minute time frame. Okay, so if we zoom out just a little bit, and we can see that when the 200 EMA is underneath, like I stated in that video, it means that we're on a bullish uptrend. Doesn't mean that you can't counter trend. You can do it, but it just indicates that we're on a bullish uptrend. Same thing when it's on a sell. When it's underneath the candlesticks, it's indicating that we're on a bearish time frame. We're on a bearish market, like it's on a bearish trend. So now that you guys have gone back and seen that video, let's get into it. So up here, okay, we have a higher lows. Also, look, this is what I mean by this is what I mean about do not rely off the fib points. The fib point, like here, here, and here, those are points as well. Like I said, excuse the noise, the background noise. I feel like I'm gonna have to say that every video, but here, that's structure. right here. This is structure, this is structure. That's why I say do not rely off the fib points, because I know somebody's gonna try to rely off the fib points and then comment on the video, yo, Cookie FX here, your strategy is trash, this indicator is trash. Do not rely off the fib points, okay? So you, as like I said, the 200 EMA is indicating that we're on an uptrend. So what do we have right here? Here we have higher lows. Whoops, let me do it again. Here we have higher lows creating higher highs. Higher lows, higher highs. Okay? You can see that even here, higher highs, higher lows, higher highs, and then it just connects. Come on, trading view. Then it just connects. Okay, like look, the market doesn't draw it out perfectly. That's why in my part 1 video, the market will not draw it perfectly. So here you have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Okay, what does the market do? If you did not watch part 1 of this understanding market structure, go back and watch it. What does the market do? It creates a lower high. A lower low, lower high, lower low, lower high, lower low, lower high, lower low, and then it breaks out and it creates a higher high, higher low, higher high, higher low, and then so forth. That's why I use the fib points. So if you use the trend line, you can see that, okay, you can take the counter trend, if that makes sense. So you can use these fib points to just strictly identify, okay, where's structure being broken. Okay, so let's look at, let me take all this stuff off. Okay, so let's look at, let me actually just stay on this screen. Okay, so let's look at this example. Here we have higher lows, higher highs. If you went back to part 1, what Elliott point is this? Point 0 to point 1, point 1 to point 2, point 2 to point 3. Okay. Oh God. All right, let me just use the trend line. Okay. So point 1, point 2, 1 to 2, 1 to 3. Okay. When you see that it's creating higher highs, what did I tell you guys earlier in the part 1? And let me actually take this off so you guys can understand what I'm talking about. Where's the structure being broken? This is why I say, I'm gonna say this all throughout this video, do not rely off the fib points. Where's the structure being broken? Point 1. Right at this high, that's where the structure is being broken. So what do we expect? We expect, actually let me take off the EMA so that, okay. What do you expect? You expect a pullback from from point 0 to point 1. That's where it's that's where the move is happening. From point 2 to point 3, that's where the structure is being broken. Remember how I said it? If it's the 0.1, 3, 5, the even number, the odd numbers, that's where the structure is being broken on the uptrend and a downtrend. The odd numbers is where the pullback is, and that's where you start your fib points. Let me say that again. The odd numbers are where the structure is being broken. The even numbers on the Elliott waves are where you start your fib points. So if you go back to I deleted it, but if you go back to part 1 of the part 2, if you go back to part 1, I'm saying that part point 1 right here, this high is where the structure is. That's where the structure is. Come on, trading view. That's where the structure is being broken. So point 2 to point 3 is where we start our Fibonacci. Now this is a good example of the counter trend, because look at what happens. It starts creating lower lows and lower highs. So we say if we clear this, It broke structure to the upside, but then guess what? You would have gotten stopped out. And then, as you can see, then the fib point gets created. That's why I say do not rely off the fib points. Okay? Because even if you start your fib from down here and you take it all the way up there, most people would expect for price to pull back into any of these golden zones. Like I said, I have my Fibonacci videos coming out real soon, so once it does, it doesn't hit those points. Okay, so where is the real move? What's the real move? Not the real move, but where's the real pullback? It's the first time, well, the first time I had it, from there to there. It's rejecting from point 2. What is it doing? It's creating a support. But since this is a counter trend, this is counter trend because it's already at its highest point, the banks will push price down. Okay, so what happens now? What does it do? Where's the real move? It's creating lower lows now. Okay, so where's the real move here? The sell, not the buy. So I know somebody that took the counter trend, they made their money. So you take it from point 0 to point 1. Okay, you take it from 0 to point 1. We're having the clear rejection. Well, not really rejection, but it's somewhat rejecting from the 38 point. So you take it 0, 1, 2, 3. Okay, what price does? Just melts to the downside. What does it do? 3 to 4, 4. Let me do it again. 4 to 5. You see how it's now creating lower lows, lower lows, and lower lows. Okay, price is telling you, it's indicating that it's breaking out of its trend. That's why I say you have to understand the market structure. You can use the fib points when you're trading live, but the issue with them is that, as you saw with this high, it doesn't just come up right away, so you can miss a lot of setups. That's why I say back test it with the fib points and back test without the fib points, because if you trade without the fib points, you don't need the fib points because you can clearly see where the structure is being broken. So here you can see these highs now are being broken. So what are we on? We're on a downtrend. 0, 1, 2, 3, 4, 5. We're on a downtrend. That's how you can use the fib points to properly backtest. Let's look at another example. Okay. Even right here, you have 1, 2, 3, 4, and then let me adjust it. 5. What kind of trend are we on right now? If I put on the 200 EMA, where are we on right now? It's breaking structure. Okay, it's breaking structure. Point 1 is the structure that's being broken. Okay, if I put the 200 EMA back on, you can see it's on a clear uptrend. Okay, so let's take off the 200 EMA off. That's why I said this in the 200 EMA video, but that's why I said I'm against like just non-indicator trading in a way, because you're kind of trading blindly in a way. Okay, so what does price do? And let me actually clear this off so you guys can see. There is a clear resistance. Okay, it's making the this was a low. Now it's creating highs, back to another low. From point 2 to point 3, this is where it breaks structure. That's where you start your fib. You wait for the pullback, and then it just skyrockets. Okay, so 0, So you have higher low, higher high, higher low, higher high, higher low, higher high. Look at how easily you can identify those things. So you start your fib from where 0.2 and you put it to 0.3. We're having clear rejections from the 38 zone. This once former resistance is now a support, and then from 0.4 to 0.5 it literally just hits all TPs and it keeps going. And on top of that, it's still on this trend. 0.6, 0.7, 0.8, 0.9, and then 0.10, 0.11, and then here is where the structure gets broken. But this is why I was saying wait till if you go back to part 1, that's why I was saying wait till I think I was saying 6 to 7, because as you can see here, it's kind of breaking out of its trend, but then it just breaks out of its trend again, if that makes sense. So as you can see here, it was on its high. This was a high. Now it's creating lows, highs, lows. So you look at it from this perspective. You go here, 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 here. Then it breaks it to the upside still, okay? So it's on a very long bullish trend. It temporarily counter trends, and then it keeps going in its original trend. And then here, like I stated earlier, it breaks out of its trend again. That's why I say you have to understand how the market moves, because some people that hold these like counter trend sells, they end up getting stopped out. That's why I say if you're going to counter trend, do it, but get out of the market very fast. But back to this example, okay? Let's go full screen. So this is what I mean. This is how I say that you can use the fib points as a way to identify market structure, okay? So you go from 0. I'm gonna say this once and once only again, okay? So 0, 0.1, 0.2 is where, I'm sorry, 0.2 to 3 is where the structure is gonna get broken. So where's the structure? 0.1. I said this in part 1 of the video. 1, 3, 5, 7. The odd numbers. I'm saying this again. The odd numbers are the structure on a bullish and bearish trend. The even numbers is where you start your fib points. So from this higher low to this higher high, so from 0.2 to 0.3, higher low, higher high, that's where you start your fib from, okay? From then, because it's breaking 0.1's structure. Then eventually from 0.3 to 4, that's the retracement, and from 0.4 to 0.5, it's breaking 0.3's structure, okay? So like I said, I hope you guys learned something from this. Please back test. You guys have to back test with and without the fib points on, because like I said, if you strictly rely off the fib points, you're gonna miss out on so many setups, because like I said, look, the fib point misses out on clear higher highs and higher lows and lower lows and higher highs. So with that being said, like I said, try to back test with the fib points and without the fib points. What I used to do is I used to back test with the fib points, and I used to take it off and I used to identify, okay, here's higher highs, here's lower lows, lower highs, lower lows. Like that's how I used to do it. And then I used to take off the fib points, and then I used to do it, okay, here it's on here's the pullback, okay, it's breaking this structure. And then it's like I said, even when you go to the line charts too, let me take all this stuff off. You go to the line charts, where's the structure being broken? You could even backtest this with the line charts as well. With the line charts is very effective as well too. Where's the structure being broken? Here, 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 here. Then it goes to the upside. You know what I mean? Like even here, where's the structure? Where's the structure that's being broken? Here, here, here. Like if you could also backtest it like that as well. You put on the line chart right here, and you just literally you go through it. okay, where's the structure being broken? Okay, these lows are being broken, this low is being broken, okay, that low is being broken, this low is being broken. Like, you get what I'm saying? So that's how you can properly backtest. But with that being said, I hope you guys enjoy this part 2 of the understanding market structure. I hope you guys get a better understanding of identifying market structure. But with that being said, like I said, please like, comment, subscribe. I'm out. Peace.